What's up guys? Today I'm going to share my top 5 stocks to buy in the month of February 2022. I spent hours of research going over hundreds of different companies and I found a few that I believe to have huge growth potential this month. The stock market has experienced a lot of volatility and a lot of stocks can be actually bought at a discount right now. Remember, we are buyers when the market falls. Now be sure to watch this video all the way through as I'll be giving my full analysis on each of these stocks and I'll be covering relevant news, significant numbers, price action of the stock, and my price predictions. As a disclaimer, I am not a financial advisor and my stock picks are not financial advice. This video is for entertainment purposes only and this is simply a compilation of stocks that I believe will do well in the coming months based on my research. As always, make sure to do your own due diligence before investing your money. Anyways, before we get started, please do me a favor and hit that like button, and if you're new to the channel, consider subscribing. I post weekly videos from my stock picks to teaching you how to read stock charts to my trading strategies. You won't want to miss out on any of these videos, so make sure to turn on your notification bell as well. So without further ado, let's get into my top 5 stocks for February. My first stock on the list is Twitter, or stock ticker TWTR. So Twitter is one of those beaten down growth stocks that could take off this month with its Q4 earnings report. Twitter is a good stay-at-home company that could do well, especially with increased restrictions related to the Omicron variant. In the third quarter, sales rose 37% year over year to $1.26 billion. That was in addition to the 14% revenue growth that Twitter achieved a year earlier. And for the fourth quarter, the company's guidance was for the revenue of $1.5 to $1.6 billion. The company just released a new subscription service called Twitter Blue in November 2021. Users can pay a monthly fee for more features and even view the app ad-free. This could definitely boost financials, especially if the numbers look strong. Looking at the income statement, we can see solid increases in total revenue year over year with margins all above 60%. Now, if you've been a subscriber for a while now, first of all, thank you so much. But you also know how much I love looking at the margin of a company. For those of you who may be newer to the channel or investing in general, margin is an indicator of profitability and can be calculated by dividing gross profit from total revenue. My sweet spot for solid companies is if the margin is above 40%. Twitter has a margin of 60%, so we absolutely love how profitable they are. Next, we'll go over to the cash flow statement, and here we can see that the free cash is $324 million, which is able to be reinvested into the company. Looking at the stats, we can see that Twitter has an attractive price to book ratio of 5. It has a beta of 0.69, which means that it is a relatively safe stock pick. Now, we're currently sitting at a price level near its 52-week low. Let's take a closer look at the price chart. Taking a look at the weekly chart, we can see that Twitter reached its all-time high of $80 in February 2021 and has been in a downtrend since then. Price is currently just above a strong support line that I have here in green at $28.58. I could absolutely see price at least come back to the top of this green downtrend line at around $60 to $70, which would be 100% profit. Twitter has shown that it can move relatively fast, so we could see it make its move within the next year. The experts are thinking along the same lines as they have this stock as a hold with an average price target of $61 and a high of $80. Shares of Twitter are currently trading at a 52-week low, with the business generating strong numbers, rolling out Twitter Blue, and reporting profits in each of the last 4 quarters. It's a strong buy ahead of its next earnings report. Now, my next recommendation is the SPY. This is a stock that doesn't need much of an introduction. This is a basket of the top 500 stocks in the United States that has exhibited strong growth recently, followed by a sizable pullback. Let me show you what I'm talking about on the chart. Starting in March of 2020, we saw the SPY drop from 340 to 220 in just 1 month. From then we saw an unparalleled rally through January. Now it looks like the SPY is cooling off a bit. The SPY had to correct a little bit. There's no way this was sustainable. Now it has pulled back to the 50 weekly EMA, which has held a strong line of support in the past. However, I could see the SPY pulling back to this area between 410 and 414, which has been held as a strong level of support. This is where I would buy calls, assuming that price action breaks the 50 EMA and continues to head lower. It seems like everyone is so scared of the market right now, but this really represents an amazing buying opportunity. After all, a pullback to the 400 to 430 range only represents a drop of 10 to 15%. Several stocks such as Google and Tesla represent a sizable portion of the S&P 500, and as these stocks correct, it's only right for the S&P 500 to cool off as well. So my final reminder is don't be scared, just trust the charts and make sure that if you want to enter a position in the SPY right now to just have money on the side to average down. Long term, if you're a believer in the US economy, the SPY will continue to just go up. It's only about weathering the storm right now. The next stock on this list is SOFI Technologies, or stock ticker SOFI. This is a financial services company that was founded in 2011. They provide more affordable lending for borrowers because they're able to focus on work history and educational background as indicators of success and ability to repay the loan. Today, SOFI has businesses in 3 segments including lending, technology, and financial services. A potential catalyst for SOFI is its anticipation to gain a national bank charter so that they can start accepting deposits that they can use to create loans. They're just waiting on approval to acquire Golden Pacific Bancorp, and this will be the first step in them acquiring a national bank charter. Now, the company is not yet profitable, as we can see here on the income statement. This is because they are spending aggressively right now in anticipation of future growth in a disruptive industry. This could be driving the price down and could be reflected in its volatility and price since its IPO. Looking at the stats, SOFI has an attractive PB of 2.85. Price is currently sitting near its 52-week low at around $12. Looking at the chart, we can see that price action is currently sitting at the bottom of this downwards channel. If it follows recent trends, we could see price action then bounce from this area and head higher, perhaps to the $20 to $25 range within the next 6 months. This is a great buy and hold, especially given its disruptive position in the banking industry, a potential catalyst on the horizon, and its attractive price point. Analysts have SOFI as a moderate buy with a high price target of $30 within the next 12 months. Another banking pick that I have is Charles Schwab, or stock ticker SCHW. I love banking plays, especially in an environment of rising interest rates and high liquidity. When mortgages and loans rise, banks can earn even more money. Deutsche Bank's Brian Bedell, who calls SCHW stock a top pick, is encouraged by Schwab's balanced focus on organic growth, client service, and merger integration, as well as its ability to generate significant financial operating leverage to higher interest rates and client asset growth. Looking at the income statement, we can see a massive jump in revenue last year from $11.7 billion in 2020 to $18.5 billion in 2021. They also have massive amounts of free cash in 2021 of roughly $6 billion, which can be used to reinvest in the company. Several investments that they can make could set them apart from the competition include asset management products and options pricing. Coming over to the stats, we can see that Charles Schwab has an attractive PB ratio of 3.64. They also have a solid beta of 1. Currently, the stock is on an uptrend, with price recently coming off of its all-time high at around $95. The yellow line here is the 20 EMA, and this has held as a solid level of support over the past year and a half. I'm a buyer when it retraces to the 20 EMA or this first line of support at $84. Analysts have them as a strong buy with an average price target of 105 and a high price target of 130, which represents a 40% increase from the current price. I can easily see the stock reaching that 125 to 130 level within the next 3 months. So my last stock is NVAX, or stock ticker NVAX. This has been a promising stock that has taken a decline recently due to their delayed schedule in applying for an emergency use authorization from the FDA for their COVID vaccine. However, on December 31st, they just submitted the final data needed to the FDA, and they anticipate submitting their request for emergency use authorization by the end of January. With Omicron's continued prevalence and increasing case numbers, there could be a strong demand for more vaccines. NVAX could absolutely blow up in price if it gets emergency use authorization during February. It's still risky, and I wouldn't recommend throwing a ton of money in this stock. Let's quickly take a look at the numbers of the company. We've seen a massive increase in total revenue from 2019, with current revenue at $1.2 billion. However, operating income is taking a big chunk out of this profit, and the company has reported losses over $950 million last year. They could definitely use an income boost, and soon. It has a PB ratio of 13, which is pretty ideal, as well as a beta of 1.16. Looking at the weekly chart, we can see that NVAX has been on a massive downtrend, with price recently breaking the 200-week moving average. However, price is currently sitting at a very attractive level at $82.92. This represents an amazing buying opportunity, especially if the company can get emergency use authorization. Analysts like the prospect of NVAX getting authorization as well, and they have a price average of $243 and a high target of $315. As this is a risky investment, I would recommend allocating just a small amount of your capital, and you might even want to buy option contracts with at least a 3-month expiration date. Make sure to have a plan to cut losses, but I'll be in on this play with you also. If you're going to play this stock, let me know down in the comments below. So those are my top stocks for the month of February. As always, remember to do your own due diligence on the stocks that I mentioned here. I've got a lot of faith in each of these stocks to do well in the coming months, but that doesn't replace doing your own research on them to determine if they are the right fit for you. Also, if you haven't signed up for a Robinhood account already, go ahead, click on the link in the description below to claim your free stock. Ultimately, it's a win-win because you'll not only be supporting me and enable me to create more videos like this for you, but you'll also get a free share of stock as well. If you haven't already done so, please hit that like button and subscribe to the channel, and don't forget to tap that notification bell to get notified when I post a new video. Also, be sure to follow my Instagram at TraderIsaacs, as I post daily stock market tips, tricks, and trivia on there. Currently, I'm doing a mini-series on technical investing, so you definitely won't want to miss out on that. Anyways, thank you so much for watching, and happy investing. Peace.